Hi everyone, my name is Mishkin Santa and I'm the International Tax Director at the Wolf Group. In today's segment, we'll be talking about G4 visa holders. When do I have a tax return filing requirement? This is a fantastic question, and I can say that typically there are 3 scenarios in which you'll have a filing requirement, where you could have a filing requirement, okay? The first scenario deals with what we call effectively connected income. In the tax world, we call this ECI. The second scenario deals with what we call fixed, determinable, annual, and periodic income, and in the tax world we call this Fadap. The third scenario deals with what we call a foreign disregarded entity, and in the tax world we call this DRE. Let's walk through all 3 of these scenarios to figure out if you have a U.S. tax return filing requirement. Under the first scenario, when we talk about ECI income, the most common example is wages. And I know you're saying to yourself, wait a minute, I'm a G4 visa holder, I work for an international organization, and I get paid wages. Is that ECI? The answer is no. Because you're a G4 visa holder and you work full-time for an international organization, those wages are tax exempt. So you would not have a filing requirement if that's your only source of income. Let's change the facts slightly. Let's say that you're a G4 visa holder, you're working full-time for an international organization, but now you have rental property and you have a tenant that's paying you rental income. Well, guess what? That rental income, that's ECI, and you now have a tax return filing requirement. Let's change the facts again. Let's assume that you're a G4, you're a full-time employee for an international organization, but your spouse is not. Let's assume your spouse is working as an employee for not an international organization, so a non-international organization. Her wages would be ECI, and therefore she would have to have a tax return filing requirement. Now let's move on to Fadap income. Fadap income is typically income like U.S. dividends, capital gains, and certain types of interest income that are taxable to non-residents. Typically speaking, the G4 must submit Form W-8-BEN to their provider in order to make sure they have the right withholding tax rate. If they fail to do this, or perhaps have the wrong withholding tax rate, then they may have a tax return filing requirement. That's why it's critically important that you properly complete Form W-8-BEN. Under the last scenario, we'll discuss the DRE, or disregarded entity filing. This typically occurs when a G4 creates a business entity, sometimes known as an LLC. Maybe they do this for their own private business, or perhaps they use it for rental property. But regardless of why the business entity is created, as long as the business entity does not file what we call a partnership or corporation tax return, it will be treated as a disregarded entity filing. This filing is pretty critical because it contains IRS Form 5472, and failure to either file this form or properly complete this form is a $25,000 penalty. So make sure you do that one timely and properly. Also, you should note that this filing requirement began for tax year 2017. So if you have any issues related to tax years 2017 or moving forward, you should seek out the advice of a qualified tax practitioner.